Joy of missing out.
Joy of missing out. The Jomo.
The Jomo.
The Jomo.
Let me just take. We're getting ready to go higher. Go
Hardcore
higher.
Jomo over here.
It's going higher, y'all.
I'm flashing the wrong screens as we're live on YouTube, everybody. You wanna
Ladies and gentlemen, welcome to the Bullish Bears, where we give you the dish.
Need that soundboard, man.
Dish.
Gotta get that soundboard.
Gotta get that
I'm gonna
soundboard.
get us some freaking sound bits to throw in here.
So I keep flashing the wrong screen over, and it keeps doing weird stuff on my end. But anyway, let me fix that real quick.
Looking at pictures of your kids?
No, well, yeah, but no.
No.
But yeah. Let me go
no.
back to the call. There we go. So, and then I gotta fix the Discord thing. Cool.
This is the face of Jomo.
So we're taking some time out of our day. We're missing some killer trades to bring this to you live and direct on our YouTube channel. We've got some stuff to look at today, and a couple things to kind of touch on. I mean, you know, we've had a hell of a week last week, man. I mean, it was just methodical trading SPY and the futures last week. I was on a groove, like, Tuesday and Wednesday through the whole thing. I traded my A off, man. It was just nuts. If you look at the trading history on my chart, I'm just like, I didn't realize I had made a couple hundred trades each day. So it came out. I mean, I was green as a shamrock and just cool, calm, collective, and just scalped little moves, little 3-pointers over and over and over again until Jay Powell was about to take the mic. I was running long, and then the moment he touched the podium, boom, I went and flipped that into a short, scalped that whole thing down minute by minute, even second by second. And then Friday, dude, I started messing with a 1 second chart on Friday, and I probably shouldn't have, because by Thursday I was feeling a little fatigued, but I was hanging in there, and then I snapped back towards the end of Thursday, and I felt great. And then Friday I felt amazing. I took just a calm, collective approach to the market. I wasn't excited or depressed about anything. I was just mellow and chill, And then hooked up with Creed. We did our thing in the afternoon for MoneyNet, and it was just a matter of explaining that I'm not feeling like I'm over trading here. I know that a lot of people, if they tried to do that, they would be like, "Oh man, alarm bells go off. I'm over trading." But if you're just cool and collective and you just trade the substructure, unless you're trying to beat around and chase the substructure, you're technically not over trading. But you got to build the experience slowly. You can't just jump in and trade that 1 second chart. You can't just jump in and trade that 10-second chart. You've got to build some time into this, some experience.
Exactly.
Hey, there's no way you can just jump in and do a 10-second chart.
No.
You got to be able to do a 1 minute first, and that takes a little bit of time if you're new at trading. You can't be in a hurry to learn. You got to
No. That 1 minute, I'm telling, when you're starting out, it's got to be like 5, 15. Like, do the longer.
You gotta,
see it all unfold and then take it to the shorter. It's like riding a longboard versus riding a shortboard.
Or even starting out in infancy. I mean, you gotta crawl, walk, run.
Yeah.
And I always see, when I reference, I'll watch new parents out in the wild, and my wife and I, we've had 4 kids, so we've
in the wild.
The wild, new kids out in the wild. Where do you go for that wild? The local mall?
Here's the wild statement part of it.
We went for a hike.
Yeah. So I'm out there and I'm seeing some couple, and they got a toddler with them, and the toddler's just learned to walk. And I always give them the look when I see the toddler sneaking off, just outside of the attention loop. They're talking to each other, they're talking to friends. The kid's sneaking off, and I'm watching a toddler. I'm like, I'm gonna be ready to grab that kid if the kid gets into real trouble myself. Yes. Yeah. And then I see finally the parents realize, hey, the kid's walking off. They're about 20 feet away. Crap! It's like panic mode. Sprint, grab the kid. And then on their walk back to the other parent, I'm always like, they just keep getting faster. And they give me that look like, oh.
Next time, buddy.
Yeah.
They just keep getting faster.
Start doing wind sprints now.
And they get taller most of the time, too.
That's also a good reference to the market, Jeremy.
Exactly, man. So it's like, crawl, walk, run.
Crawl, walk, run. You are not kidding.
Eventually,
I want to
you'll-
get in this trade so bad.
I know, man. I know. Eventually, you will outrun your parents, and this is the whole thing.
Damn
Like
it.
you're gonna be learning from your peers. You're gonna be learning from guys like us. You're gonna be learning from anybody you're learning from, even if you're not learning from us. You know, you pick up a lot. You go out there, you study, you learn tons of stuff about how to trade, and it's all out there. But it's like you've got to pace yourself into it. You can't just dive in and start, scalping like a beast on your first day. It's
No.
not going to happen.
You can't. You have to have
Not gonna-
joy-mo. You have to be able to see it and say, "Oh, I missed it, but I saw it." That's what I
Exactly.
always said, right?
saw
I
it
missed
there.
it, but I saw
I
at least
remember
I
that.
saw
Saw it there. Saw it there. Yep,
Exactly.
that's exactly it. Exactly. You can't expect to walk out on a golf course and just hit 300-yard bombs down the middle every time.
Nope.
You might get lucky when you first do it, just like in the stock market.
Yep.
A lot like golf.
Mm-hmm.
You might
Yeah,
get lucky the first time you do it, but then after that,
You'll make that home run, and the problem that I see a lot of is like people will make a home run, and I got this, and they start swinging for the fences every time, and then it's just like, nope. Sorry, man. You're gonna get put back in the minor leagues here, bud. So
Back in your place. Yeah,
Yeah.
on a golf course, it's like, I tell the guys all the time, I'm like, the problem was when I started thinking to myself, man, I'm cruising, and then it just falls right out from under you.
yeah,
It's it's a mental and emotional thing.
it is.
Man.
That's why you have to get it to like Jeremy's got it to the mechanical, if you will. It's mechanical in the sense that it there's a system, and you wait for everything to happen with that system. You
All
wait
of that to line up
for your entry. It's got to line up. Everything lines up, and you don't do anything unless everything lines up in your strategy.
right.
And once you do that, and you can take that emotion out, totally take that emotion out, and just let it be systematic, man. Then you're cruising. Like once you're able to see two hammers, one at 1335 and one at 1340, and you know that those two hammers give you a bullish indicator, then you should be able to get in.
Don't
Right.
forget about
catch-
the indicators that went
Yeah.
along with that.
That's
the
exactly right.
intersections,
There's the
everything else.
intersection.
Yeah.
Then you can catch a $2.50 move.
Mm-hmm.
Very quickly. And that's the thing. It's like
joy of missing out.
you start breaking it down in a mechanical sense. Yeah, you get you get bigger components, and within each of those components is a score of smaller moving parts and smaller moving parts for those components. And any more modern automobiles don't have like millions of moving parts. They never really did. They're all basic and simple.
points.
They just keep bolting sensors and stuff here on there. It all works the same.
I seem
And
to remember some planetary gears blowing out of my transmission back.
I remember that day. I made you wash the gear oil off my car. I was dumb enough to follow you.
He's behind me.
I was
We just
behind
came
you.
off a canyon run.
Yeah.
We came off a canyon run, and we're going down a main drag
Yeah.
after we were done with our run. And we're just cruising. I'm downshifting to get to a light, and all of a sudden, the planetary gears blow out of my transmission. Just
Yep.
everything behind me.
The pin fell out, it raked the housing, and everything just went like a grenade.
We were
It was
able to
cool.
see.
Funny.
We were able to see through the top of the transmission all the way to the floor.
Yeah, all the way to the
ground.
road, all the way to the puddle of oil. Here it comes.
Y'all are funny.
But-
There's something happening. I think there's a Fed speaker.
Is there one today? I haven't even looked. I just
go.
anymore. I'm
It's-
so focused on the chart. I just don't know.
I know, and that's the key. Is the chart. The key is the
Yeah.
chart. I like- And you said it
It's
in our
also a
chat
0
today.
day. It's a 0 day.
Yeah.
Day.
But
0 day.
still, it can be a 0 day in trend. We've seen
yeah.
that more than once. He's
Many,
getting
many
ready
times.
to push again. Dang thing. Where
So-
are we going next?
Let's
50%.
let's get into our chart a little bit. I'm gonna start with the daily chart, and we'll work our way back.
There we go. And that's what we do. We
That's
go
38.16.
Wait. look left, hobbits.
There it is.
Look left, hobbits.
Look left, hobbits.
So let's
Look
get into the daily. What we're looking at. Let me stretch this out a little bit. So you got kind of a repeat of what's happening here. It's very similar. Although we didn't get the same crash channel, we got kind of the good idea where we get the double bottom, you get the L1, H1, L2, breakout, pullback, whatever. All right, same deal. We've had this trend, okay, L1, R1, L2. It's a little deeper, and that's fine. That found liquidity and bounced right back like a red rubber ball. Just about nailed target 1, but or L1, sorry, H1, R1. Too many numbers and letters. Okay. Came to the mean of that sucker, pulled back, came back into the support zone, and look where my cursor stands on this little green candle here, right? So we got the crossover, 8-period crossing above the 20. The whole thing is a little bit bullish, and then all of a sudden we get this gap up candle. It just follows A to B. There's your red hammer next to that right there. Boom. A to B, runs up, punches, comes back, tests. All right. Then we get this nice hammer here above R1, and where do things go out of a double bottom when they do that? They'll hit the target usually. Mm-hmm. So you get the target from the left side back in the previous bearish trend. So we got target 1 about the top of this bar here, pretty close. Mm-hmm. It almost hit it, and then it pulled back. The next day it did wick it right to the bone. I mean, right to it. Pulled back. Natural things happen when this happens. Usually when you get a double bottom in a bearish trend, you short the rejection of R1, right? Or you short the rejection after target 1 if it comes down to a rebound. And you watch for a breach of the 8-period and you write it down. On a 1-minute and 5-minute chart, that's kind of typical. You see that a lot. Well, in a daily chart, it works the same. It's just it takes a little longer. I mean, you got to have some patience here. So you look at the target 2. Target 2 was not much of an extension, and it didn't quite make it to the extension of this bar here. Not quite. We have some unfinished business up there because that's about a 50% retracement of this entire trend, right? So there's a good chance if we close with a nice clean hammer pushing through the 8-period today, tomorrow we'll open right around the 8-period maybe and continue on up. Tomorrow is the election day. Things going on. There's the old adage, and if you repeat back in history, anytime there's been the GOP in the Senate and the House, and you got a Democrat president, market loves gridlock. Okay, bottom line. Yeah, we've got a chance to trend out of here. We've got a chance for this to be an actual reversal pattern, and comparatively, the weekly chart. Sure, it just looks like a giant double bottom, and we've pulled back to the support line. Maybe we can start trending out of this. We don't always have to be bears.
Can I throw something in here as well?
Yeah, absolutely.
I read it in the Wall Street Journal last week. Anytime Twins, or not the Twins, I'm sorry. Anytime Philadelphia's ball team, whatever ball team, has been in a world championship, it hasn't been good for the market.
Nope, I've heard this.
Right down to the market crash in, what was it, 1928?
29, yeah.
28, 29?
Yeah, 29.
Wow, the Phillies. So
the Phillies, yeah.
So that we gauge by the Phillies now. Okay.
We can do that.
Well, I mean, it's just an interesting
I didn't know
thing.
that. I didn't know that strategy. I didn't realize that.
It wasn't a strategy. I'm just saying it's an interesting coincidence that whenever the market has not been in a good position, Philadelphia has been in the World Series.
That's
World Series.
That goes right back to my home statement. The market is going to do what the market's going to do, but there's one thing that's true about the chart that is not true about all the external influences on the market that can be superstitious. The chart, it's not superstitious.
It's gonna just tell you what it is. It doesn't care who you are, where you come from.
Push again, dang it.
Right?
It's getting ready to push.
It is. So we're looking at
22 next.
2-hour chart, very basic, very simple. We've got this big old bar from here. We're about in the middle of it right now. And if we break out above it, sure, we can shoot that whole bar. And that takes us to the 50% of this bar. Yeah, we can trend here. I don't see a reason why the market couldn't be bullish here. And it's already expecting to be a situation where we end up in political gridlock. Kind of put the things together, and the chart tells you, yeah, this could reverse here, we could trend here.
I see.
It's all written in the chart. Now let me turn the nasty on. We've got diamond patterns everywhere.
Oh my God, look at it! It's so beautiful.
We were able to range, the FOMC day by this diamond right here. It was methodical, dude. I mean, went right to the top and right to the bottom. We had both targets freaking nailed. I mean, we were
nailed.
Dead on, dude. It was just an elating feeling to be that cool. But now we've got this purple diamond. We've met that price action range. That's all done. All right. What's next? We don't have the kind of volatility pattern that we would typically see before a big event. We don't quite have a diamond down here. This is not what that looks like. We look like a bit of a double bottom that's come back, tested target 1, pulled back to L2. Now we got almost a triple bottom, and we're breaking out long. We got above the neckline. That's right here. Now we're working into this bar right here. We're at the 50%. There's a good chance we could close at our old friend 382 today.
382.
We love 382. We've been there so many times. It's like just an old friend.
Baseline.
Yeah.
It cost at 379.65. I called out earlier.
Man, we loving this. And I'm
380.22.
I'm scalping the futures a little here while I'm talking to you guys. So
how you doing that when you told me not to trade?
Wait.
Well,
what kind of chart are you on? 10 second? A second?
1 second.
1 second chart?
I pull off and do that. I can't resist sometimes.
While he's talking.
Oh no, it's funny. While he's talking.
So
it's because he's AI. He's the Tradinator from Skynet.
The Tradinator.
He's the Tradinator from Skynet.
No. From Bullish Bears.
I got my phone. So
I got my phone in my hand.
Let's crawl this out a little bit more. So let's say we got suddenly let's roll down to the 30-minute chart. This is where this starts out.
How many crickets? How many waves is that on the 1 minute?
Oh, on the one you don't want to know. Let's get into that in a second. We got the pretty much set up for the base here. We got L1, we got high 1, low 2, high 2. Ish. This is a very softly placed wolf wave because it lines up with the trend. All right. So I've placed it a little loose. We can adjust it later, but it points right at a 382 close. I can see that. That's very valid in my opinion. There we go. So looking at the range on this thing above 382, well, if we open around 382 tomorrow and we hold that for support and we remain bullish, we got 386, we got 388, 390. I mean, it's the whole shebang. We're looking at range.
Look at that.
And eventually,
I'm just wondering. I want to ask a question. I'm sorry for interrupting, Jay.
Dude, don't feel bad about interrupting. This is why we're here.
So what? 3 days ago? Nope. Back out.
Oh, 30 minutes. Sorry.
Yep. Thank you. You see 1, 2, 3. Day before yesterday.
Yeah.
Okay. You see that look has the same look today.
On a smaller scale, right here. Yeah.
Yeah. Looks like it can go. I mean, it can go and then dip again. I like looking at it like a heartbeat, like bump, 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 bump.
Right.
And
it becomes like a little, you get the double murmur or whatever the hell.
Yeah. Bump, bump.
I don't know what the technical term is for that medically.
I wish I did, but
yeah, you get the little wave where you get the big wave and the small wave.
I'm seeing some of that same thing from 2 days ago. It can
kind of do that.
Earlier today.
I was actually reserving that for part of our discussion today, and I took this off before we got started. And put
apologies.
It back on. Check this out. No. Kind of set that up.
Wondering if that was
if we're gonna reject,
I was wondering about that.
What else is there? That 200 period, man. That thing is valid on every chart. So, yeah, we could hit 380, 50, 380, 60 and pull back. That is a freaking godsend if you catch it in the right way. You can go short, you can go long, you can scalp into the close. Power hour setting up pretty nice and volatile. Gives us quite a bit of range. But 382 is ultimately the goal. That's the biggest bull target we can find for a close today. We've set up where I was going to go down to the 5-minute chart and kind of demonstrate. We've got, if you look at this very much resembles the old bat harmonic. Now we've got the breakout wave of that all set to go. It's just a matter of it's got to break that 379, maybe get to that 380, 380, 50, whatever. If we hit the bullish wolf wave, the purple wolf here, we'll be in business. This will be really good. So we'll play it like it is, and in the meantime, we're going to keep it close to the cuff. We love our 1 and 5-minute chart. I'm over here, scalping a 10-second chart. Friday, I started scalping a 1-second chart. It's just kind of.
You're still watching the 1 and the 5, and you're still watching the 2 and the 4 hour. Right?
Exactly. I always verify all of that. So
looking for confirmations across multiple timelines.
Exactly. You start with the big components. You start moving into the smaller moving parts until you find a problem, just like a mechanic would, or you find a solution,
just like a good mechanic would.
That's it. So let's
Pretty
let's
wild.
get back into one other thing I wanted to talk about. As far as being able to emotionally detach yourself from the market, but also looking at the market as a whole unit of movement. Okay, we've got this rounding bottom. You can see
The
it, right?
living entity.
It's organic, man.
It
So
really is organic. It is. My friends talk about this. Like, they're like, I see a living, breathing thing. Look at the market.
exactly. So let me go into this one more way to look at this. If we get harmonics where we get that heartbeat, you get the big wave, the small wave. Well, this was the big wave. There's your small wave happening here. Now, that rejection from that angular resistance that I was talking about just a moment ago, or the one I just added, that's kind of right with that small wave. It can happen. It can pull back and go sideways into the close, and the action might not happen until tomorrow. So that's always the argument. That's why we play it close to the cuff. We take and hit that 1 and 5 minute chart, verified things on the long term charts, but we'll hit that 1 and 5 and be able to make our swing trades, day trades, and all of our setups from there. Is this a good market for a condor? Not in my opinion. Is this a good market for a strangle? I'm going to wait because I'd rather start getting in on a trend after the trend breaks. I always want to say, and you guys hear me paint this picture a million freaking times, it's don't trade the setup, trade the break. And every time you wait for that.
Paint your picture, then trade the break.
Paint your picture, then sign it.
yeah. At the end.
Yeah, at the end. And that's what it is. You don't want to get caught up in the setup and then have it fail. You'd rather trade the break. You keep your patience about you, and you keep calm, cool, collective, and you wait for your opportunity. It will present itself. You just sit back, relax. Exactly.
They say in golf, birdies come in bunches. Around professional golfers, if you're not keeping your brain relaxed, it all falls apart. But if you do, it'll come to you over and over and over.
Exactly.
Exactly.
The chart represents a lot of the old history repeating itself, and a lot of people will say, yeah, the chart doesn't always match and line up synchronized, but it does tend to rhyme.
What's your favorite stone? What's the thing?
Oh yeah,
history doesn't necessarily repeat itself,
but it often rhymes.
There it is.
And when we see these bearish patterns in this chart, we've been in that bearish trend. We've kind of had that. It's time to have some sort of reprieve. We've seen these relief rallies before. We know how to sell into them. We know how to scalp the right up. It's just it's just pretty simple. We are so able to focus on all the moving parts and also never forget to step back and look at that big picture.
Yep.
Look at the forest.
Exactly. Look at the forest and the trees. And
the trees
and the trees,
roots, branches, and leaves.
As technical traders do, it serves you, and all it takes is experience, screen time, rinse, repeat, learn those patterns, learn what you're looking at, and eventually you'll be able to glance at the chart and know what it's telling you in a heartbeat.
The other words that we like to use within our group are immersion.
Yes.
You have to immerse yourself in this. It's not going to come to you. It takes years. Jeremy
Absolutely.
took 5 years to work it at this rate. It takes years.
It takes years, and above all, it takes support. I didn't do this on my own. I learned a lot from a lot of people over a long time, and a lot of it I've been able to go and externalize and seek resources outside, and then I was able to also seek resources inside and get all the little details that I didn't get from the resources I could Google.
What I love about Bullish Bears, man, is that we can take a lot of the monotony out. I'm watching paint dry for the first 2 hours today. It was horrible chop.
When you get to that point where you can watch an analysis on TV or something, one of the big talking heads, we love to talk about chipping their teeth or whatever, and you can just hear them talk. They put up a line chart on the screen or something, and they're like, "Oh man, I'm bullish on this," and you're sitting there like, "What the hell are you talking about?"
What, like a smart?
When you get to that level where you can question those guys, you're coming along.
Are you sure, bro?
Yeah. and that, like you said, that takes time to get to that level. There's either a big pullback or we're coming back down here. So it's a good thing I didn't screw around. Anyway.
Good.
I missed my move back at 140.
Want to let you guys know.
Wait. What do the Bulls like to do versus the Bears? Bulls like to take the stairs up and what?
Just
Oh,
take
the old
the
window
window
down.
out.
Yep.
Window down. Oh, look, that was just a pullback.
Yeah, I think so.
I knew it. I knew
So-
it was.
Let's kind of break into just a quick wrap up. We're letting you guys know we're doing this on Mondays now. We're doing our middle of the day market review just before Power Hour. We're gonna try to keep this regular, just giving us a good analysis of what to expect out of the S&P. We focus on SPY with our charting here to you guys, but in the background, I mean, we're looking at every aspect of every part of this market and just putting all the little pieces together. And anytime our members say, "Hey, man, can you check out this chart from here? Can you help me with that?" Dude, we're Johnny on the spot. We're ready for that. So
Yeah, that's what we want. We want
Yeah.
you to come and ask and tell, because the point in our community is the more eyes we have on it, the better we can understand what to do with it.
exactly.
And we move forward. We all move forward. All ships rise that way.
And
That's exactly right.
the other thing to think of, the other thing I wanted to let you guys know, we're going from doing this sort of analysis Thursday after hours. We've kind of changed the slot up a little bit to where we're going to do this on Mondays in the middle of the day, because we can take a look at the week before and help to forecast the week ahead. And that's what we'd like to do. We'd like to be able to provide our insight on this. And we're not afraid to admit that we sometimes we're wrong, sometimes we're dead wrong. But for the most part, we are so well focused on this that we can go and know exactly when we're wrong and know exactly when we're right and know what to do with it. That's the
And
hard
that way
part.
we can help other people learn from our mistakes, which is real genius.
Exactly.
Absolutely. That's what you want to do. That's the thing about being in a community like this, and and you got to be able to listen to folks and ask questions. And sometimes it's a challenge. People are like, "Well, why didn't you call that out?" Or, "Well, we don't." First off, we're not a call out community.
We're not here to call out.
No, and we're not here to give advice. Financial advice. That's not our job. What we do is we teach you how to read a chart, so that you know how to get in and out of a trade for yourself.
Exactly.
And I have learned how to do this, and I've had to, I'm been in trading now a little over a year and a half now, and I've learned a whole lot. And one of the things is you got to know how to read that dang thing for yourself and not listen to anybody else but your own technical analysis. Doesn't mean that you
Your
don't
own lizard brain.
bounce things off of people,
Yeah,
but
totally
you've got
fine.
to be able to, to be able to totally trade this thing yourself.
We always bounce it off of each other, and we're able to come up with some pretty dang smart conclusions on stuff like that too when we do. So, it's a matter of, we're not going to like say, "Oh, buy here, sell here," but we're going to know that, okay, well, let's think about this. Look left. Let's figure out what the structure was leading up to this. Maybe we can come up with some targets, and oftentimes we do. And then we'll just start calling out.
The beauty of our community, though, is that we're open to other people bringing up the other side of the argument.
Yes, absolutely.
And seeing, like, I'm seeing this, and that way we really can move forward.
Exactly.
Once we get all that logic out, we know generally we have a better 60-40 understanding.
Right.
So anyway, we just kind of wanted to come out and let you guys know we're changing up the format a little bit. We're going to start doing this on the middle of a Monday rather than the Thursday afternoons, and you'll see some other format changes coming up soon. We got some excitement coming up this week. So
Hey, Jeremy, you're showing your 1 second.
am I really? Oh, to you guys, yeah. I got us on just a chat.
Oh, okay. Sorry.
Yep. And
You're showing, Jeremy.
I can see why he's using Hikayashi candles.
yeah, because those are regular candles. You can't really tell anything, but dude, there's your smooth.
There we go. There's the Hikayashi.
You know what? Let me put that on.
Wow.
Oh, here's a 1 second chart. Knowing exactly where that crossover was, right there. Get long.
Yeah,
Poof.
There it goes.
Look at
Get rid of
that.
break
Snap
over.
it out. Done. Catch the rebound.
Wow.
Wait for that.
You're in there
period.
scalping those ups and down moves, aren't you?
Look at
Not
those
at the very
moves.
second, but that's the kind of stuff I'm doing. And like you can see how smooth this stinking chart is, dude. So you go and compare this on your
Hikayashi
1 minute
style.
chart. You look at this little double bottom, pulled back, breached R1. After the cross, this is your setup right here. Enter. Boom. Ride the trend.
Can you go back to
Out.
Can you go back to the 1 minute? 1 minute. Show us what it looked like on that.
So there's your 1 minute chart, and this is Hekanashi. This is showing this part of it in the 1 minute chart. Actually, no, that was this part of it on the 1 minute chart. It's so small. And then, like I said, you go back to that 1 second chart, and it's just like, you know exactly what parts of that to rip and exactly when to get out. right there, exit, boom, done. That whole trend is yours. All those ticks in there on the ES chart, that is all yours, just based on a basic simple signal. Price above the 8, 8 crossing above the 20. Confirm your pattern. Go verify your 1 and 5 minute chart for where you're going to end up being. And
Verify the fractal.
there was your buy signal right there.
That's
And
it.
to boot,
Verify the fractal.
to boot, look, flat line on FSTO and breach right then and there, just before that candle. It predicted
That's
it.
That's the accumulation.
Now that's
Channel
a
right there, right?
1
This is,
second signal.
Is this going to close another doji?
I think so. It's working back to support again. But that was real quick and easy, and that's what I'm saying about learning how to scalp fast. Is like you get faster and faster and faster at it. What you get from that is more and more and more repetition. You get to see these patterns and know exactly what to
That's
expect.
exactly right. That's exactly right.
And you know, in 1 second, I had my decision. Boom, buy. And then 1 second, right here. Look at this little breach over. It happened just before that pullback. Do you see the FSTO right here? Sell right now. Boom.
Wow.
That quick. And it's like, that's a 1 second chart, Jack. how do you learn how to do that? How do you get there?
On a 1 second chart.
Yeah.
Well, slowly. That's how you get there.
It's just, yeah, you take your time, you learn all these little patterns, and you build into it. You get on the 5 minute chart, you learn them. You get on the
kill the
daily chart.
Hikayashi on the 1 minute, yeah?
Yeah, let me get this.
There we go. So we use Jeremy's using Hikayashi on the 1 second because it's too choppy and as we like to say, ticky tack.
Yep.
You guys call it ticky tack, yeah.
Ticky tack.
Yeah, call it ticky tack. So it doesn't look right. So we use that to get the understanding, but he's using the 1 and 5 minute to confirm. Okay.
And that's why, you started seeing me get into like super relaxed mode when I was trading last week. It was just, I can sit there and make 400 or 500 lows a day. It can happen. I'll get there. I'm not there yet. I got to 200 last week, but that was on 2 days straight of straight volatility. Yes, that was useful. Now this flat choppy stuff, I might trade 10 or 20 times a day in those little substructures. That's it.
You thinking more like wheel trade?
Right now,
kind of chop?
Right now it's let's wait till the election thing goes over before you start to wheel or swing. This is going to be just relax. We got a few earnings of mid caps this week that are going to kind of come out and shake things up a little bit. But I think we're going to get some signals here by about Thursday. We should have a good trend direction indicator, and we might even take a moment to produce a little analysis video that we can put out on Thursday if we have time. It's going to be a busy day. Worst case scenario, we'll get out Friday with a live stream or something and kind of break it down in our live stream and maybe get that out to you. But I think swing trading is going to wait till next week. Maybe you might be able to find some signals this week by the end of the week. But like I said, it's going to be the joy of missing out. I mean, if you're not into being able to scalp this volatility on a 10 second and 1 second chart,
I'm trying to have Jomo.
If you're not up to the level of scalping this on a 1 second, 10 second chart, dude, just wait. Let the setup come to you. Trade the break. Don't get chopped up in the setup, guys.
Again, immersion.
That's it.
You've got to. It takes. How long did it take me to learn how to downshift, Jeremy?
Too long. Actually, it took you a good solid month because that was kind of a trick.
To rev match, yeah. Yeah, it is.
Like,
and it's the same. It's the same kind of thing,
it's funny. It's like there were so very few of us who knew how to rev match on the street back then. We're upshift and downshift where we can make a clutch last 200,000-300,000 miles because you don't use it.
You're not using it.
Don't use it. Yeah, just get in the right spot and don't use.
You're not sliding it. You're not treating it like a brake. You're not treating it like absorbing your torque to accelerate. It's just you're just using it to get in and out of the gears, and you don't need to actually use much of the friction sliding on that thing to waste it. So, and then flash forward to now, and it's like every time I'm sitting on a street somewhere, I can hear a lot of people doing it. It's like, oh man, we got to be part of that. But that was
cool feeling.
You listen to people drive on a racetrack, and you kind of learn from them, and you're like, oh, I know what he's doing. He's bringing the engine up to speed, so it spins faster, and then he goes into a shorter gear, so he can slow down for this corner without fading his brakes, and he can also be in a proper gear to accelerate out of this corner quicker. That's what the purpose of it is.
V to U.
And That takes a lot of practice. You got to know your equipment very well. And same reference here. You got to
Same
start
thing.
with the big part, learn how to drive stick first in general, and then you can start playing with the little advanced features of, hey, I
Same
can
thing.
rev
Get out of
match
first
my engine.
gear. It's like
And it's-
I taught your brother how to drive stick, and the first thing I was like, listen, if you can get the car started 5 times in a row, we can go out to the main street.
There you go. Exactly.
And it's the same thing on this.
Exactly.
Get out of first into second 5 times in a row, we're good.
That's it.
Right, and it's the same, and this is, Jeremy was talking earlier also, maybe a little off the subject, was about your entries and your exits, but he's trading on a 10-second chart, he's trading on a 1-second chart. He was paper trading earlier today on a 1-second chart. Now, not everybody can do this, folks, so just remember that. But he was practicing. He wasn't trading real money. He was
Not actually doing
practicing.
it. Yep.
And so when you get a strategy, and that's what we've been, we're working on teaching people. And we had somebody in our room today trading with live money, but one shot stock at a time and a penny stock, which is a great way to do real money because you're spending less than, I think that stock was less than $6 or whatever.
I'm so glad he's doing that too, man. Like,
yeah, and with a stop time. I mean, with a stop time, with a stop loss.
Yeah,
With a stop
trailing
loss.
stop.
Time.
Yeah.
Okay, never mind. Sorry, wrong industry. So,
I guess you could
Okay.
think of if you
is there a red light that just turned on somewhere?
yeah, somewhere like that. So so it's like you got to practice, and you've got to be able to. They say it all the time. You read it everywhere. Perfect a strategy before you use it on real money.
Yes.
Now, if you trade penny stocks and you've been working on a strategy and you want to try it live, well, one share is the way to do it with stop loss, so you're not killing yourself, right?
Absolutely.
You can do that. You can do the MES. If you're starting out and you're learning price action, you're gonna blow yourself away on the MES because you're gonna get stopped out and you're gonna lose a whole lot of money. Don't do that.
Remember that earlier when Jeremy was trading on, what were you on the second? You were like, oh, it didn't stop me out there. All right,
Yes.
I'm clean. It didn't stop.
It missed me twice.
Oh, it's trying to take me out. Nope, didn't take me out there either. All right, we're riding.
It rolled
And I
that
mean,
momentum, and it was setting up for like a half leg measure move, and possibly finishing with the second leg of the half leg. And it was just playing around in that area, and then it was missing my stop by one tick every time. It was
Like,
cool.
Just barely.
It's like I'm in it for the rest of this if it goes, but if it doesn't, I am exactly where I want to be for an exit. And it was
Dude,
perfect.
one tick out of the stop. Wow.
And I was building that on the MES chart, practicing my own strategy with live money on my own account, and then I went and comparatively back tested that on the ES with a much larger amount, with paper on the ES, just to make sure this is going to be a viable strategy. So I'm like going out and
scaled up,
taking small money, and then scaling that up to practice this new thing to me, trading a 1-second chart, to see if it's going to be viable for something with size. So I'm like, okay, well, let's throw a paper account together and throw an obscene amount of contracts together, but not exceed 20% total day margin limit, and run that and to see, what the potential is for this in the future. If I, suddenly have, let's say I have, $10,000 worth of knowledge of being able to manage a $10,000 account, and then try to trade $1 million account with that. The logic is, if you can't handle that scale up emotionally, you're not going to be able to handle it as you grow your account.
Physically,
Exactly.
yeah.
Like you'll hit a wall and you'll never be able to get over that hurdle. It takes forever.
Because it works differently at that higher amount.
Right.
Because your risk is higher, but can I scale up and use the same strategy over here?
Right. And that's the thing. Like I had for a while, I was taking the small futures accounts, and I would run them up to a certain amount. I would distribute them to my bigger account because it was comfortable. I didn't have to worry about over trading and making stupid moves with a big amount in that account. I just rolled it into my other account where I'm wheel trading, selling options, doing spreads, stuff like that, and then the rest of it's idle cash collecting interest.
You were using small. Let me break that down. You were using small account funds, building those small account funds through the week, taking care of your necessities, and then you'd roll the rest into a lower risk.
Exactly. And it was just a point. I wanted to scale this up a little at a time. So there's my first hurdle. And then I earmarked some to set aside for some bigger bills in one of my trading accounts. And they're not exactly pressing me to pay this whole lump sum all of a sudden. And it's like, I'm like, okay, well, it's a medical thing. You can work out payments with them if you want. But when they find out how much liquidity you have, it'll influence their decision on whether or not they're going to let you make payments on this. So, like, oh, well, you can just liquidate that and take care of us right now. Yeah. Well, that's the difference. So in the meantime, I'm like, I got this capital earmarked. I'm like, I'm going to see if I can scale my proven fact of small account management into a bigger account size and use the same strategy, just emotionally detach myself from it, do what I need to do. But I'm going to trade a bigger amount, and it's earmarked. So I know of certain drawdown limit. It's going to be earmarked at that level.
How much bigger did you go? Like, what did you scale to comfortably?
Comfortably, I mean, I don't want to go numbers, but let's say I made.
Go ahead, or whatever you need to do.
I made quite a few 100% increase from what I started with, and then the next level
on the
was
week
to go
on the weekly, right? From your small account on the week, or
yeah, I mean, it took me. Well, I mean that one account that I had where I traded it for what was it, 6 weeks? I think it was.
Yeah,
I
remember. I remember.
So that one I did give numbers live on, and it scared the crap out of me too. An account I opened with $500 in 6 weeks, ran it to $18,000.
Yeah, but wait a minute. Let's get that right.
And you got to the point where you were like, I'm a little outside my comfort zone here. Yeah,
exactly.
Go ahead, bud.
Because it wasn't at 500 when you did that.
Yeah, no.
I'm not mistaken. Boy, that was a big drop.
Yep.
If I'm not mistaken, you had actually run it down to about 190.
Yeah, I ran it down first because I was messing with brackets.
You were running futures and brackets, yeah. So you got down to 190, and then you took that to 18K. Yep. Now, let me say what somebody always.
Wow, you didn't say that before, bro.
Yeah, I forgot that part.
Try this at home.
It's so long ago.
Do not jump into the stock market and say, "Oh, well, I heard Jeremy Greenland did this. He did it 6 weeks. He did $18,000. And if you jump in and do that, you're gonna
you're gonna white yourself up.
So
5 years, 5 years of studying to get there.
Here's
the
thing, though. It scared me. It brought me out of my comfort zone. You're absolutely right. It put me in a whole new realm of what the hell did I just do? And then I looked back, and last week we had a snafu where we got locked out of. This was the scenario that I was afraid of, that I didn't think of. The size it took me to get to that level from $190 something. If I would have had a snafu, that account would have been wiped in an instant with the risk I was taking. So, like. Was it last week or the week before? It was like a Friday.
It was 2 weeks ago. It was a week from this past Friday.
Got locked out of my trading account with 2 contracts short on MES for like 15, 16 minutes. And I'm sitting there like, oh, crap. This is not my bigger account. It might hurt a little bit.
Lockout you've ever had.
Yeah. And, I'm sitting there like, okay, I watched it come down below. I was like, okay, this would be profitable. And then I'm sitting there locked out. I'm watching the data on another brokerage, but I was sitting there watching the data. I'm like, I'm okay. And then it came back to about where my entry was. I'm like, oh, crap. If this thing runs past me, it's going to run me over. I better start getting on a chat to try and get in touch with my broker so I can get out of this trade. I was like number 3 in the queue by the time I was actually let back in the account. I'm like, woohoo, cool. And then I watched the price tip over and I'm like, I'll just ride this. Cool.
Oh, never mind.
That was like
never mind.
That was a $560 lockout.
Yep. I ended up
two MES
contracts. 2 MES contracts.
Now I don't know the percentage on those, but that was a pretty well. Actually, that 2 MES contracts. Yeah, you could figure out the percentage on that.
Yep.
560 at $10. So that was hundreds of percent.
Compared to day margin on that, it's $55 a contract for day margin. So yeah, that's pretty good.
That's pretty good.
Really nice return. And I was just like,
a really nice return.
But I was bearish on Amazon earnings. That's why I got into that position. I had logic in it. I knew what was coming, and I was very bearish on Amazon.
What gave you that? What gave you that logic, okay?
The setup on Amazon was actually pretty neat. You know what? Let me get the chart back up. We're running into overtime. I know it's in power hour, by the way. So we
are in power hour right now.
we're gonna walk this through real quick. I'll get out of this, and then we'll go into Power Hour and be with our members here. But Amazon. All right, there's that drop. All right, what led me to be bearish on Amazon? Well, let's have a look, shall we? Let's see. Do I have some dirt? Yes, I did. Just a little history repeating, but you know, we had a gap down, and well, I have all these sub indicators here, like you can see. You know, there's all kinds of little things.
Those
that you can pop
Weeble
up
sub
towards.
indicate.
Yes.
Weeble sub indicators.
But
Weeble.
what did I have overall? I had the setup for a bearish measured move. I had a nice trend down. We did have a short-term reversal. We didn't make a 50% retracement. That's this line here. That would have been a 50% retracement. We broke a bear flag over. And I'm like, okay, let's ride this thing down. Well, coming into earnings.
What was your verification, would you say, on that?
Coming into earnings, I was looking at the 2-hour chart, and I looked at the key resistance point from here. This was where it was 120.40, all right? And going into earnings, I realized we faded that, and then we broke the critical support right here. This was the 112. And going into the end of the day, I realized that...
that's an upside-down elephant foot.
Yeah, right there.
Yeah.
So
right there.
Right.
Yeah.
as soon as I realized we smoked the key pivot, and that was the key pivot right here. We smoked the key pivot by the end of the day going into earnings, pure technical, and then looking back on a daily chart and then looking at some of the metrics that were coming up for Amazon, realizing, okay, well, they've been, they had to, what they had to do, they had to lay off a bunch of people, they had to pull back a bunch of contracts for their delivery systems, whatever. They were going through some stuff. But let's look a little further left here. Oh no, where's my retracement? Where was my target? That was my target, and I forgot where I got it. It's on a daily chart. Oh yeah, control zone. Daily chart. Had that all plotted
Bang.
out. We broke the key support and salamo right through that sucker. And then we went to the baseline, right on down. It was easy, cut and dry for looking at a daily chart. But what got me to look at that on the daily chart? The weekly candles. That's what. Control bar
Guys,
here.
You're going to have to excuse me a second.
Sure.
I can't wait.
Yeah. Broke key support, you know, it ran down, and it ran down to a key support area. That's where I have my key support drawn from the weekly chart right here. Just this accumulation zone. Pretty simple. Now, what do I want to do? I want to, after this whole midterm election thing blows over, I think I might start wheel trading Amazon. That's just what I think.
Blows over.
Yeah. I think
Well,
I might.
like, that's isn't that what you like to wheel anyway?
Yeah.
Amazon is one of your favorites to wheel trade, isn't it?
It's one that I've been wanting to wheel trade. Back in the day, I was able to day trade a couple shares into closing on earnings like this and just scalp the after hours earnings real quick, whether it was bullish or bearish. I was able to just flip a couple shares in and out, know where the levels were. Was never really able to sell options on it very effectively. I was never able, well, a couple times I was able to do a couple credit spreads on it and do well, but I was never able to play with those kind of numbers in any meaningful way. And I thought to myself, well, shoot, if this was on Amazon's trading around $3,000 a share, I'm like, well, shoot, if I had like, $600,000, what could I make per week selling weekly options out of the money on this thing, wheel trading it? And I was looking at it, I'm like, my gosh, I could make about between $4,000 and $8,000 a week wheel trading Amazon. Okay. Now think back to when
what do I do to get to that?
When we were kids and Amazon was just coming out as an IPO. I mean, we could have got it dirt stinking cheap, and it's had several forward splits since then.
Don't remind me.
Here we are under $100 a share. Now we've got the capital to maybe put something together for a wheel trade on this, and I don't think
and
they're going to be
looking good to do it. It's looking good enough to do it.
Well, it's bearish now, but let it settle. But, looking at selling puts and calls on this thing, that's a dream of mine. I like the idea of it. And, looking at the weekly chart, we'll eventually hit that support area and curl out of it. Will we stay bullish? That's hard to say. Let's zoom out even more. What's the general trend on this sucker? I mean, this has been bullish, pullback, bullish, 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 bullish. All right, just like everything else, it came down to a support zone. Is it have another leg up? Will it be a giant weekly double top? It can be. But in the meantime, I can wheel trade that until I don't no more. You know, I have an opportunity now that I didn't even think about as a kid.
Right.
Leg in, leg out. I mean, when we were kids, Jay, I never would have thought that you and I would get access to these candlestick charts.
No, you know.
When you were like, "Hey, Devin, you got to check this out," I was like, "What are you talking about? I can't actually look at the market."
Yeah,
You can. You just didn't know it.
You just did. Hey,
You
that's what
didn't-
happened to me. I didn't know it until God bless AMC.
Yep, that's it. Anyway, we're gonna sign off. We got to get to Power Hour with our peeps, so we'll see you guys next week. And
remember to like, subscribe, and hit that bell.
yes, hit the
Yeah,
bell.
you're right.
And above all, check us out on Thursday. We got some excitement coming up. I'm not even going to tell you who it is. It's going to be awesome.
Make sure you join on Thursday. I'm not kidding.
After hours, it's going to be
After hours
lit.
on Thursday. Mm-hmm.
Right on, guys. We'll see you next
All
week.
right. Much love.
See you all next week. Bye bye.